What's happening with the trend lines? Because I still have probably some of the old S corps, but are people new entities? Are they moving more to the LLC?
Actually, the numbers are quite interesting. The number of S corporations continue to increase. As Mr. Anderson points out, a number of those are conversions of C corporations. But as I recall, the most recent numbers, the annual increase in S corporations are about evenly split between newly created S corporations and those that have converted from C corporation status. And the reasons are varied. I think Mr. Anderson touched on a number of them, why certainly that conversion, that's the way to go if you are currently a C corporation. There are other instances where S corporations provide a simplicity and a clarity. I know that's a little bit contrary to what we've been talking about today, but there are, if your alternative is partnership, things can become very, very complex very, very quickly. And so for some entities, the creation of an S corporation as opposed to an LLC or specifically a partnership is still an appealing way to go. Mr.
Kerr, I want to just touch real quick on the bookkeeping, the IRS. How does the IRS treat, a sub-S over another entity? Is there, in terms of auditing, is it a difference from your standpoint? I'm just out of curiosity.
I don't think that our members see a difference when IRS selects an entity for audit, whether it be a partnership or whether it be an S corp. As an aside, I think it's interesting.
Thinking like a sole proprietor or just a small partnership or an S corp. Do they treat an S corp differently?
Oh, okay. I was looking at the selection criteria.
I'm not looking so much at a C corp comparing that. I was just curious an S corp how that compares to.
I don't think so. Because at the end of the day, many of the tax code provisions apply regardless of the entity that you've chosen, and IRS tends to be interested in those provisions. And they apply without respect to the structure of your company. As an aside, the other interesting thing is that IRS is in the process of what they call an NRP, a National Research Project, in which they're focusing on S corps, and they've selected 2 years of returns. I think it was 2002, 2003, and I would expect that those results are coming out imminently. And I think that it may be interesting for those of us in this room to pay attention to what IRS has found in its rather detailed audits of about 5,000 S corps.
I mean, just my last question in general is just the attraction. A lot of companies, S corps, be able to attract capital. This is something we set up 50 years ago. Now, today, there's probably opportunities, a lot of opportunities for foreign companies or foreign investors into S corps, which I think is not allowed, I guess, my understanding. What's your thought on that? Is that something that you think we have to consider and give them more capability like a C corp to look at foreign investors and S corps in terms of them having access to capital? Do you want to comment, Mr. Klassen?
I would. I certainly would encourage consideration of measures that would increase the access to capital for S corporations, and it could be done through a variety of ways. Increasing the number of shareholders is certainly a possibility. Implementing procedures or changes to allow certain types of other equity investments, so-called qualified preferred stock would be another option. Certainly, going back to some earlier comments on built-in gains and the implications of that, when those assets are subject to tax for 10 years, it causes the S corp owners to hold those assets for an extended period of time and causes even greater complications in terms of their access to capital. In many respects, S corporations are left with very vanilla means of accessing capital, and any provisions that could expand upon that, I think, would be certainly appreciated by the S corp community.
Any other comments on that? You want to add? Mr. Shin, I just wanted to ask one last question. Passive losses. And I was interested, I know that Florida is, and I'm sure Vegas and parts of California have been devastated about the whole concept of, in terms of real estate values following this, the idea of if you got to have, a lot of people probably have passive losses they can't use, which would be helpful if we're able to free them up. Well, give me your thoughts on passive loss of, in terms of S corps. Would it make a big difference? Or what are you seeing?
Just like the one example I gave you where a business owns their building and they're renting out part of the building, that particular loss is trapped in the 469 part of the code. And I think that either allowing it to be part of the, if the business is in the building, give them a break. The other thing is, with 469, as we sit here and we watch, that's the code section for passive losses, we have really destroyed the opportunity for people to take the cash flow losses that they have on their rental property. And let's say the person has their tile business and they lay tile in houses in commercial property, and so they decided to buy a couple of rental houses. Well, they have huge losses now, and some of those houses are maybe going to go back to the lenders. Instead, maybe give them the opportunity to take more of the loss. There's a $25,000 limit right now for low-income people. Maybe increase that amount. But I think that our passive loss rules have created a real tax blunder, so that now we're faced with this real estate issue. Now, how does it spin with the small businesses? I try to give you some examples of here two situations where small businesses. I have a doctor office. They bought a bigger building. They only needed a quarter of it, but they put up the capital for the full building, and as they try to find tenants and the tenants can't pay and they're 2 months slow, they're incurring losses, and those losses aren't allowed to be deducted against their other income. So, because of the passive loss rules.